Hi, welcome to the Investment Blueprint. I'm your host, Raghu Kumar from Rain. The Investment Blueprint is a podcast where you can find me interviewing traders, investors, quants, and finance professionals with the idea of helping pass on their knowledge to you. Today, I interview Yash Sarda from Above Alpha Solutions. Yash started investing from the age of 16, and he quickly went on to learn various styles of investing, like value and momentum investing. He worked at a private equity firm in Singapore where he learned the art of designing systematic models for investing. And he currently runs his quantitative strategies at his family office. His trading style primarily involves trading breakouts. So, Yash, welcome to the podcast.
Hi, happy to be here. Sorry about that. The bell just rung, so my dog was barking.
Oh, it's okay. My dog is also in the background here, so maybe they'll talk to each other. Um, so cool. So yes, I've gotten to know you a little bit over the past year, but I want to kind of know just generally, how did you get into investing and trading?
So, both the members of my family, my mom and dad, they both are investors. So, from a very young age, I was encouraged in the family. And like when I was maybe 10, 11, I used to go with my dad for dinners with his friends, and they used to just sit and discuss on stocks, which stock is looking good, which stock they should buy, what's the story. So, that used to always get me interested. And then later, my mother was part of this women's organization which promoted financial literacy for women. So whatever she used to learn there, she used to sit with me and explain it to me. And they mostly taught her stuff about Warren Buffett and Peter Lynch, which really shaped my philosophy and understanding of the markets early on.
Got it. Got it. So, what is it about like a Warren Buffett or a Peter Lynch which kind of captivated you?
So, so I come from a slightly middle class family. So the fact that these people could create so much wealth through investing really inspired me because I saw it as a means to grow and give my family the things which they would want, and like we would just be successful through investing. That was always my goal, to just learn how to invest properly so that we could grow our capital. Because early on, like there was this Warren Buffett quote which stuck with me, which said that if you don't find a way to make money while you sleep, you will work till you die.
That's right. Yeah.
So that really got me thinking, and yeah, got me very interested in learning how to do stuff.
Got it. So you basically went abroad, right? So your education is completely from countries outside of India. Can you maybe tell me a little bit about that? Because I think in my past conversation with you, you told me that that's when you basically got intrigued, about investing. And my follow up question to that is, did you, while you were going through that whole phase in your life, did you know that eventually you would want to become, like an investor and apply some of those principles to your family office business?
Yeah. So up till class 12, I was in India. Then for college, for the first year, I had gone to US Villanova University. So I studied over there for a year. I was studying finance there, and I was part of some finance clubs. And I met quite a few people over there who were interested in finance and talked to quite a lot of professors. Then after that, the weather over there wasn't really suiting me, and I fell sick like three times in the first year. So my parents shifted me to Singapore Management University, where I studied for another 3 years. And I was doing accountancy in Singapore Management University, so it was less flashy. But while doing that, I always, on the side, like I was always helping out my father with his investing activities. Like we used to research stocks together, and we used to look at companies together. And my dad is primarily more of a trader, so he used to look at from those aspects as well. So understanding all of that, like it gave me a little bit of theoretical and practical approach together, because while I was working, I was also studying. So that really helped me. And yeah,
Got
I
it.
kind of always figured that I would always be an investor. That was my dream, like always to be a really successful investor and hedge fund manager.
Got it. So we'll talk about how you apply your quantitative skills to investing. But generally, I'm very curious to know how a family office operates, and just generally how that differs from just a traditional, investment. So maybe you can kind of, shed some light on that.
So, like, we have a family group of companies to like spread out the tax burden. So we primarily have two NBFCs which we operate, and so my dad and my grandmother are the director of both of those. So we primarily have our own funds which we invest in a blend of bonds and equities. So we have a research team of one or two analysts, and we together basically invest and trade in stocks based on, we trade our own money primarily. We're not exactly licensed to manage outside capital, so we trade our family money, and that's the primarily difference between a family office investing and maybe a mutual fund or something. In a mutual fund you have many more clients. In a family office it's your own money which is at stake, so you're slightly more
Right.
careful with that.
Got it. So I also want to know about your company, Above Alpha Solutions. What is it all about?
So Above Alpha Solutions was a way for me. It's an LLP, so it's an investment LLP. So it was like in my dad's NBFCs. My dad slightly has some other activities as well, like maybe giving loans to intercorporates and all those things. So when I was discussing with earlier fund managers, they said that you need to have a track record to show people. So my objective with forming the LLP was to have a separate standalone entity which primarily just runs my quant strategy. So it could be easily, it wouldn't be mixed up with dad's other trades and other strategies. So it would be to showcase the performance and the track record as such. So
Got it.
it just got founded this year only. So it's a work in progress.
Got it. Got it. So let's talk about systematic trading and quantitative trading, right? So in all my conversations with you, you seem to have a very strong affinity for quantitative trading. How did you get introduced to the quant world?
So I think in 2019, I came across this course by Quant Insti, which is like an executive master's in algorithmic trading. So it was like a 6 month long course. So I did that, and that, like, I always, like, as a kid I always had a fascination for computers, and I heard stories about people like Jim Simons who made phenomenal money using quantitative systems, and I was always kind
Right.
of an analytical person. So I used to think that my dad was a manual trader, so I used to always think, and I didn't like his style of trading because I felt it was very flippant, and it didn't have too much decision making which had some rationality to it. So I really wanted a system apart from the manual system. So I was looking at ways to go about it. And the Quant Insti course was a 6 month course which really helped me and gave me ideas of how to test strategies, because earlier I had no idea. Like, you can have an idea, but you really need to know how to test it and evaluate it from a statistical standpoint and see if it actually has any significance. So I started doing testing after that. Then I got an internship in a private equity role where they were trying to get me into systematic models for private markets. So while doing
Hmm.
that, they were reading books based on people who had done their research on public markets and hoping those same criteria would also work for private markets. So when I saw that, and while in college, I was lucky enough to have access to things like Bloomberg and S&P Capital IQ, which had very good data sources. So I could easily test my ideas using those data sources. And once that
Got it.
came into fruition, like, I tested it for 10, 15-year periods, and I was shocked at the results. I was like, this is thrashing the indices. So I really, then I went to it with my dad in July 2019, and I said, Dad, look, this is working so well. We really need to start allocating money to this and away from mutual funds. So
Wow.
yeah.
So can you walk me through like some of those examples? So how do you use Bloomberg to make a decision, for an investment in the private markets? What kind of data are you looking at? And maybe you can kind of walk me through like a example investment.
Mm-hmm. So we were primarily using more of Capital IQ because that has slightly more fundamental data. Bloomberg is better for trading, but Capital IQ is slightly better for getting investment data. So we had a Capital IQ screener which could screen based on historical data. There are a lot of screeners today which screen only based on current data, but Capital IQ screener could screen based on historical data as well. So we had, like, I always had this one criteria given by Warren Buffett that the return on equity of a company should be high. So what we first did, we combined return on equity with value factors like price to earnings and price to cash flow. So then we added in some more balance sheet stability factors like low debt equity and high current ratio. So then based on those five factors, we screened every year based on that. Then it gave us a list of 10 to 20 stocks, and then we put the price data of one of the day it was selected and 1 year forward. So we were basically doing a buy and hold strategy for 1 year. So, and every year we rebalanced it, reran the filters, and we got new stocks. So we just
Got it.
kept on doing that, and then we did that for a 10-year period, and then we calculated the CAGR over the 10-year period to smooth it out. And so that gave us an idea of how it was working. Then my when I gave the value strategy to my dad, he looked at some of the names and he's like, "Oh, these names are disgusting. I don't ever want to touch them." So I said, "Okay, let me think of how I can make them prettier names to look at." So then I tried looking at momentum investing, because momentum investing are more successful companies, they're better known, and people like them more. So I tried out the same thing with momentum, like return on equity with momentum. So that gave pretty good results as well. And I think in India, return on equity with momentum worked slightly better because there's slightly less fraud. Because in a lot of the value names in India, there can be quite a lot of fraud. Like when I started investing, I invested in two, three companies which just went belly up because of fraudulent activities. So
Hmm.
that I think cleaned up. And then there were some books which I read on accounting analytics, which really helped as well.
Got it. No, that's always there, right? You have that appeal of dealing with a company or a stock which is well known, which has a strong reputation. It actually reminds me of the movie Moneyball, right, where they're basically looking to draft players from for the Oakland Athletics, and Brad Pitt, who's the main actor in that movie, he basically says, we should go for all these players, and these are essentially like low value players, right? The market has, basically discounted them, but they don't have that kind of appeal, right? That market appeal, right? So I find that very interesting. And so basically, you then said, okay, so we can resort to momentum stocks, right? Can you describe a momentum stock?
So we typically look at the last 12 months performance. There's a lot of data which suggests that a stock which has done well over the last 12 months will likely do so over the next 6 to 12 months as well, because the momentum carries forward. So for us, we define momentum very simply. Like we take all the stocks in the universe and the stocks which have the top 20% highest last 1 year return. So then that's our next universe. And out of that, then we filter based on other criteria like return on equity and low debt.
Got it. So, are you saying that if you use this kind of filter based system and a quant system, then generally you're going to generate better returns than being a discretionary investor? And B, as a follow up to that, are there situations where by being a discretionary investor, you can actually generate better returns than a quant system, maybe because of having a good feel for the markets or whatever?
So for the first part, I would say like the universe of stocks in India and US both is massive. Like in India, there's about 2,000 stocks. In US, there's about 6 to 10,000 stocks. So it's not humanly practical to look at all of them. So what
Right.
getting those filters does is that it narrows your investment universe to focus on slightly better stocks which have a slightly better chance of succeeding. So that's the main criteria, like, because there are many ways to skin the cat. Like, I know companies which are not profitable at all which have gone up 100 200% in a year, and I know companies which have a 50% return on equity which have gone down 30%. So there is no one right answer in investing. It's basically what works for you and what you can do more consistently. It's not about what works sometimes, it's what works or something over time. That's the main thing you have to look at. Because like in the short run, anything can work. Like you can buy a random IPO stock which can double, you can do anything. So
Sure.
yeah.
Yeah. And you're also looking for, like, the Teslas of the world, right? Which may not showcase the best numbers, fundamentally, but obviously, the price of the company has gone up tremendously. Do you face that problem? Like maybe when you're using the screeners and filters, you're missing out on companies that are just, outliers and just generating extraordinary returns, without the fundamentals being in place.
Yeah, that happens a lot. Like a lot of times, like I run like a YouTube channel and an Instagram page. So a lot of times people message me, "What do you think about this stock?" And it's not in my system. So then I tell them that it's not in my system, so I can't really give an opinion on it because I haven't done enough research. But then it goes up 15, 20%, 30% over the next 2, 3 weeks, and they're like, "See, I told you." but but
Right.
but that's the price you pay for being a quantitative investor. Like by
That's right.
definition, you need to have a system in place because if you kept
Right.
moving as to what's hot at the moment, like it's not a very good way to run operations.
Sure. Yeah. So let's talk about your trading as well, right? So you also trade the markets. How do you, first of all, how do you spend time, in the day? Because you're doing so many different things. You are dealing with your family office. You have, above alpha solutions, and you're also a trader. So I'm actually curious to know how you kind of spend your time during the day. And then I want to kind of also dig into your trading. What is your trading style all about?
So typically, I wake up by around 6 o'clock because my dog wakes me up and she wants to go down. So after
Okay.
that, after I come back up, I open my laptop and I screen run my screener for my trading criteria, and then I look at stocks which are near their breakout points, and then by 9 9:15 I have everything ready. So I have a game plan before I even enter. Like okay, I'm gonna be buying this stock. If the stock does this, I'm gonna be selling this. If it falls to this level, my stop loss is gonna get hit. So I have this criteria all pre-planned by 9 o'clock, and then between 9 to 3:30 I don't take any more decisions other than the ones which I've already made before. Because while the market is open, you can get influenced by a lot of emotions. So you need to keep that aside. And then after the market closes, like I take a nap from like 3:30 to 4:30. And then after that, I also trade US markets. So then I start doing some screening for US stocks, which in India now it opens at 8 p.m. So that keeps me busy. And then by 8 I don't monitor the US markets throughout the night. From 8 to 10, 11 o'clock, I monitor it. Then I go back to sleep.
Got
So
it.
those are the weekdays, and the weekends I go to the golf club and I play golf and I swim and I just enjoy and go out for lunches and dinners.
That's pretty cool, and I think all that's really important, right? It keeps you fresh when you're trading. So you basically trade breakouts, with your trading. How has your trading performance kind of evolved over time, and what are some major learnings that you've kind of developed, through your trading history?
So, so for the breakout trading strategy, that's a relatively new strategy for us, and like I learned it through this guy called Mark Minervini. I read his books and understood his system, and we've been doing it for the last 4 months, and it's been really successful. The main idea about these breakout strategies are is you're where the action is. So the action happens really fast. So if you're gonna get stopped out, you get stopped out within 3 4 days, and if the stock is going to take off, it just takes off immediately, like within 4 5 days. So like for my dad, like I gave my investing strategy to my dad earlier, but like he's more of a trader, so if it goes up 10 15%, he's tempted to sell it. So I said, okay, if you really do want to trade, you need to have a good strategy in place for trading as well. So then
Hmm.
we started doing this, and then his trading results also drastically improved. Like like last 3 4 months he's made about 30 35%, and he's very happy with that. So it really, having a proper, like, learning from people who are more successful than you and who already done what you're trying to do really helps. So like Mark
Right.
Miller, he's a veteran trader and he's done it successfully. So that's why I gave my dad his videos, his books, and I said that if you do want to trade and trade actively, you need to learn from people who've done it well. And he's got a very good system. It's a very simple system that you
Hmm.
wait until the supply of the stock stops coming to market, and then when it starts breaking out again, it forms a line of least resistance, and then it just takes off. And
Got it.
yeah,
So that's done pretty well for you guys.
yes, it's a very good strategy. So it
Got
works
it.
pretty well.
That's amazing. What I really appreciate about what you guys are doing is you are applying, kind of rules based systems to both the investing and trading world. But at the same time, I think you have a nice hybrid approach, right? It's not like you are running a fully algorithmic model, right? A lot of the people that I talk to come from the algo trading space. I do think that algo trading has its pros and cons, right? I think from a pros perspective, it completely eliminates any sort of emotions. But the con is, sometimes I feel like if you do have a good feel for the markets, then that goes away, right? When you're completely automating your trades. So what I appreciate about you guys, especially, running a family office, with so much skin in the game, right? And like literally the entire thing is your skin, is you're practical about the whole thing, and you're kind of using these things as tools to improve your general decision making, right? Yeah. That's really cool. So that was really insightful. As a last question for today, Yash, this is what I ask all the guests. Where do you see yourself? Your family office, and even above Alpha Solutions, in the next 5 10 years.
So our goal is eventually to try and develop systems in such a good way we can offer it to other clients as well and get the necessary licenses. Like, it's slightly complicated getting licenses in India and managing the different accounts. Like, suppose if you have a PMS, you'll have to do the trades in everyone's account. You can't pool the money together. If you have an AIF, it's slightly different taxation and people don't want that. So, like,
Right.
as we grow our trading profits and become bigger, our options increase as well, and maybe we can set up in some tax havens like maybe Mauritius or Singapore, where people are more happy to give you money there. But my end objective is to have like a large hedge fund where we're running like $1 billion in capital, and it just feels good and you feel like a hot shot. And just
Sure.
basically, like, to be a good financial respected financial professional whose opinions people value and they learn from. So it's always nice, like, suppose you go and say that, oh, I bought this stock, everyone else follows and buys it, like Warren Buffett's approach. So
Right.
that
No, and I think it's I mean, there's nothing wrong with having that goal, in my opinion. And I think you're definitely on the right track, right? Because again, I think the fact that you're using all these screeners and filters to simplify your decision making frees up your time, right? Allows you to kind of operate in a probably more de-stressed manner, and gives you that opportunity to probably succeed, right? Um, so very cool. So thank you so much, Yesh. That was a really nice
absolutely,
conversation. I'm sure
yeah,
we'll have more conversations in the future,
yeah.
and talk to you soon.
Talk to you soon. Thanks for having me.
Cheers.